wabirangije ntabwo ari ibintu byinshi ni uko nyine urumva wakumenya ko natwe dukora kuri revo ntabwo wavuga ngo ikintu ngo kidasanzwe wenda gukora ntacyo kintu kidasanzwe ahubwo nyine ni uko twakora.
So welcome to today's class. We were on the chapter CVP last time. We said that in cost volume profit, we looked at how to calculate contribution to sales ratio last time. We looked at how to calculate the break-even point. We looked at how to find the margin of safety and sales units to achieve target profit. That is what we had looked at last time. So we said that last time, when you want to calculate all those items, you can calculate them by use of formulas. We covered all those formulas, or you can also use graphs. Now, it's very technical to draw graphs, but I will try. Very technical to draw graphs on the screen, but I will see how best to do it. So last time we had covered formulas, and maybe just a minute to pass through the formulas we covered. We started by looking at contribution to sales ratio. We said in order to get the contribution to sales ratio, it is selling price per unit minus variable cost per unit divided by selling price per unit times 100. Break-even point, it can either be break-even point in units or break-even revenue. So break-even point in units was fixed cost divided by selling price minus variable cost. There was also break-even revenue, which was BEP in units times selling price per unit. So that is break-even in money form in Rwandese francs. Or alternatively, you can get the fixed cost divided by contribution to sales ratio. So that is what we also looked at. Margin of safety. Margin of safety, we said it's budgeted sales minus BEP in units. Margin of safety as a percentage, we saw that it is budgeted sales units minus BEP units divided by budgeted sales times 100. We also saw sales units to achieve target profit. If you want to make a certain profit, what do? You get your selling price per unit minus variable cost. You make sales units the subject. Now, when you make sales units the subject from the formula, sales units will be equals to profit plus fixed cost divided by selling price per unit minus variable cost per unit. Now, in CVP analysis by use of graphs. So this is where we want to do the same, but by plotting a graph. So how do we plot a graph of CVP analysis? Now, last time we saw that before we start today's class, I just wrote that so that, so we saw last time that there are 3 graphs that we need to know. So we'll just be looking at the graphs one by one. The first graph is called break-even chart. The second graph is called contribution break-even chart. And the third chart is called profit volume chart. So those are the charts we want to look at for the next 45 minutes or so. And then if we have time, we will go to the next topic. So in this case, now the first chart is called what? Is called traditional break-even chart. So that is number 1. Number 1 is traditional break-even chart. What we have there. But I'm wondering why I left a lot of spaces. So the first chart is called traditional break-even chart. I've shown you how it looks like. So in a traditional break-even chart, take note that I don't know. Yes, maybe I'll try to draw. So The first chart, maybe if I draw it here, is a traditional break-even chart. So how does a traditional break-even chart look like? Now. Let me try to see if I can draw it. Just a second, please. So in a traditional break-even chart, if we have I'm just trying to set up a drawing. If we have that to be the y-axis, and then we also have so of course this is y-axis, this is y-axis, this is y-axis, and this is x-axis. So you know y and x, this is point 0. So in this type of chart, there is a line that is straight. Like that. This line is called fixed cost. You know, it's not easy to draw with your hand. So this line is called fixed cost. So we must be in a position to draw a fixed cost line. Now there is another line that starts from where the fixed cost starts here. So where the fixed cost starts. So there is another line that starts from where the fixed cost. Let me see if I can draw it. I hope you can see it. Oh, so, sorry for that. Drawing a line is not quite easy in the screen. What will I do? Yeah, I've managed to draw it. So there is a line that starts from where the fixed cost starts. This line is called total cost line. Total cost. That line is called total cost line. Now there is another line that starts from point 0, not where the fixed cost starts. It starts from point 0 and note it is a straight line. It is not as crooked. It is not as crooked as mine. Let me see if I can draw it better. It is not as crooked as my line. So a line like that. I'm seeing you have lost the screen. I'm just trying to get it back. Which screen can you see? Somebody to type for me, which screen can you see? I don't know what the problem is. Which screen can you see on the screen? But I'm not seeing it. I don't know what the problem is. Can you all see the PowerPoint? Okay, it has come back on my screen. Okay. Okay, thank you. So what I was saying is this. You can also draw a line that starts from it has stopped inking. Okay, I'm back to it. You know, drawings is not, I'm trying. So a straight line that starts from point 0, this is called total revenue. Total revenue. Okay, that is total revenue. So there are lines that you will draw. If we are drawing a chart, that is how we draw it. So there is the total revenue, there is the total cost. The starting point, remember, total cost does not start from point 0. Total cost starts from the point where the fixed cost is. Total revenue starts from point 0. Total revenue starts from point 0. Now there is this point where the total revenue meets the point where the total revenue meets the point where the total revenue meets the total cost. That point is called BEP. You know, drawing is not that easy. You'll have to excuse me. That point is called BEP. So what is BEP? The point where the total revenue meets the total cost. So this is BEP in units. In units. In units. So we can also find something like that. Okay, this will be what we call target sales, budgeted sales. That will be target sales. Now, when we get this point of BEP, but we read it from the y-axis, it becomes BER. It becomes BER. What is BER? It is break-even point in terms of revenue. So here, remember, we have money. Y-axis, we have money. So we have France, and this side we have what? Units. This side we have the units. I'm just trying to draw. So in that case, we have the units. Now, there is the boundary between target sales and BEP. There is this boundary here, There is this region here. This region between BEP and that, this is what we call margin of safety. Margin of safety. That is what we call margin of safety. That region there is what we call margin of safety. Okay? What else is remaining? This region between total revenue and total cost, this area here is the area that gives us profits. This region here gives you profits. You'll just excuse me, you people. I'm trying to draw, so it's not easy. That region gives you profit. There is this region between total revenue and total loss below the line, this side. This is the region that will give you a loss. Please remember that. That is called a traditional break-even point. The key word in traditional break-even point, the difference between this chart and the other chart is this. Traditional break-even chart has a fixed cost line. Traditional break-even chart has a fixed cost line. So when you are drawing in exams, that is how you draw. If you have been asked to draw that in exams, that is how you draw and find the figures that you want to find to enable you know the traditional break-even chart. So the key point, traditional break-even chart has a fixed cost line. Traditional break-even chart has a fixed cost line. So that is number one, traditional break-even chart. The second chart, look at this. The second chart was contribution break-even chart. So how does a contribution break-even chart looks like? I'll duplicate the same, but now I'll change this into contribution break-even chart as our number 2. Contribution break-even chart is our number 2. Now, what is the difference between traditional break-even chart and contribution? The difference is here. Take note. In our contribution break-even chart, we don't have the fixed cost line. Fixed cost line is not there. Fixed cost line is not there. In a contribution break-even chart, fixed cost line is missing. Now, the fixed cost line is replaced, by a variable cost line. Is replaced by a variable cost line. So it is replaced by variable cost line. Variable cost line is the new one. And the variable cost line starts from point 0 and it is parallel. It is parallel to the total cost. So there is a variable cost line and it is parallel to the total cost. So if you've been asked what is the difference between contribution break-even chart and traditional break-even chart, you will say the difference is under the traditional break-even chart, there is the fixed cost line. Under contribution break-even chart, there is the variable cost line. Under that, there is a variable cost line. Under contribution, there is a variable cost line which is parallel to total cost. Under traditional, there is a fixed cost line. In the contribution, there is no fixed cost line. In the contribution, there is no fixed cost line. There is only a line called what? Variable cost line. I hope we've understood that. The remaining are remaining the same. All the rest are the same. All the rest are the same. What is chart number 3? Profit volume chart. So profit volume chart is always quite different. I'll again duplicate. So we'll go to number 3. This is always quite different. This is very different from the others. Just allow me to rub everything. I'm just trying to rub everything. Okay, I have rubbed everything. So we want to go to number 3. So number 3 is called profit volume chart. 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 Sorry for that. Profit volume chart is quite different. Now, in a profit volume chart, you have your y-axis. Sorry, again, my drawing is crooked. You have your I'm trying to see how best I can draw a straight line. You have your straight line there. Not very straight, but I'm just trying. And then you have, so you have your y-axis and you have your x-axis. You have your y-axis and you have your x-axis. Now, in this case, this is 0.0. So you have your points there for your x-axis, your points there. You have your points, your many points are there. And this shows the unit of sales. Units, sales units. Now you realize the y-axis has got lower levels. There is the lower levels and there is the upper levels. There is the lower levels and there is the, now you know that in a number line, these sides are negative. Maybe this is -1, this is maybe -2, this is maybe -3, this is, sorry, this is +1, +2, and maybe +3. And then there is a line that leaves here and passes this. This is called a PV line. PV line. PV line. PV line is profit volume line. PV line. I'm not very, now in this case, where the line meets the x-axis, remember this is the x-axis. Where the line meets the x-axis, this point, if it is a PV, this point here, this point there. So this point there, that one, that point there is the BEP. Is the BE what? P. That point gives you where the line meets the x-axis. That is the BEP. That is the BEP region. Where the line meets the x-axis. That is, we always call it, in other words, we call it x-intercept. Where the line intercepts. Now, of course, here, this will be your target sales. This is your BEP. The difference between target sales and BEP, this one gives you the margin of safety. This gives you the margin of safety. This region is the loss. The loss region. And this region is the profit. Profits. That region is a profit. That region is the profit region. So that is how a profit volume chart looks. I've really tried to draw. It was not easy to draw that. So there are 3 charts. That is how the charts look like in exams. Now, knowing how the chart is sketched is not important. You must know how to do calculations that will enable you to plot the chart. Now, these are the same charts. I've just repeated them there. But now remember, they are the same, but now this one, I just wanted to show you how they are drawn. So here, which one is this? We said this is total cost. This is total revenue. This is the profit region. This is the loss region. This is the fixed cost. And this is the MOS. This is the point BEP. It is the same thing. I've just shown it if it is already. Now in the y-axis, it shows the cost and revenues. So remember, traditional break-even chart has got a fixed cost line in it. The other one was, this one is contribution break-even chart. So we have said this one is total revenue. This is total cost. This is variable cost. You realize there is no fixed cost here. This is MOS. This is the MOS. This is the BEP. That is the BEP region. So that is what we have there. So contribution break-even chart, total revenue, total cost, variable cost, margin of safety, and that gives you the break-even point. The last chart that I've just drawn the other side, of course, is profit volume chart. This one is profit volume chart that we have already drawn. Profit volume chart that we have already drawn. Next, before we go to an example, there is what we call accountants. Let me just go home. Accountants versus economists break-even chart. Accountants versus economists. Accountants expenses, okay. Economists expenses. Economists expenses normally include opportunity costs, while accountants expenses don't include opportunity costs. Take note of that. Normally, sometimes you can be asked, there are two break-even charts. There is one for accountants and there is one for economists. So economists expenses, let me call them costs. Economists costs, let me call them costs. Costs instead of expenses. Costs normally include opportunity costs, while accountant costs don't include what? Opportunity costs. That is the first point we need to learn under the differences between accountants and. So economists costs, that is the starting point. Economists costs normally include what? Opportunity costs, while accountants costs don't include, they don't include opportunity cost, while accountants costs don't include opportunity cost. So that is our first point. So therefore, according to accountants, total cost is equals to fixed costs plus variable cost plus opportunity costs. costs, while therefore according to accountants, while according to this is according to economists, sorry for that. So according to economists, total cost is equals to fixed cost plus variable cost plus opportunity cost, while according to accountants, total cost is equals to fixed costs plus variable costs. Take note of that. So according to economists, total cost is equals to that. While according to, so we can say according to, instead of, so that everything fits. According to economists, total cost is equals to fixed costs plus variable costs plus opportunity costs. In class. So this is according, so what are we trying to say here? What we are trying to say, economists incurs more costs compared to what? Accountants. Compared to accountants. So according to economists, they incur more costs. Why are their costs more? Because it also includes opportunity costs. Opportunity costs, will cover it in another topic. But most of you who have done economics, you know what an opportunity cost is. It is what the sacrifice we make, the alternative that is sacrificed when you are making a choice. The next best alternative that is forgone. Most of economists know that. So according to economists, total cost is fixed cost plus variable cost plus opportunity cost. So economists incurs more costs compared to what? Accountants. Maybe the last point. Therefore, when BEP charts are drawn, when we draw BEP charts, comma, accountants will break even first before economists break even. Break what? Even. So therefore, when break-even charts are drawn, accountants will break even first before economists do what? Break even. Before economists break even. Accountants will break even first before economists break even. Before economists break even. Before economists break even. That brings us, duplicate. That brings us to the end of CVP. You'll only need to assignment. Maybe I can give you an assignment there. Read on assumptions. You can just Google these assumptions of CVP analysis. Assumptions of CVP analysis. You can read on that. And that brings us to the end of that chapter. You can read on assumptions. You can note it somewhere. It brings us to the end of the chapter. Just a minute. Sorry, I was just taking some water. So in this case, what we are trying to say, I hope you can now hear me. What we are trying to say in this case, these are CVP charts, break-even charts. Let me see, but it is quite difficult, quite technical. Let me see if I can draw them in Excel. So look at this. So let me share with you the Excel. Now read the question. This is the way a question that asks you to draw the chart will be tested. So let's read this question. The question reads, a new product has the following sales and cost data. Selling price per unit is 60. Variable cost per unit is 40. Fixed cost is 25,000 per month. Forecast sales is what? Forecast sales is 1,800. Forecast sales, sorry, is 1,800. Now, in this case, next you are being told forecast sales is 1,900. Required, prepare the break-even chart using the above data. Prepare the break-even chart using the above data. And also prepare the break-even chart using that data that has been provided. So how do we prepare when you have been told to use such data? That is what we want to look at. How do you prepare the chart when you have been given such data? So in this case, just a second, please. So in this case, when you are to prepare, I'll start with solution, part A. Part A is break-even chart using break-even chart. They have not told you which break-even chart. So we can just assume traditional. If you have not been told, you assume we are preparing traditional break-even chart. You assume we are preparing traditional break-even chart. Now, in this case, in order to prepare a break-even chart, we will look at this. I hope in high school, in secondary school, you are taught how to prepare charts, to draw charts. So we can say at BEP, if you agree with me, at BEP, comma, total costs is equals to total revenue. Do you agree with me? You can type yes if you agree with me. What is BEP? The point where we don't make any profit or any loss. So do we agree at BEP total cost is equal to total revenue? Okay, thank you for agreeing with me. So at BEP, there is no profit, there is no loss. Therefore, to draw a total cost line, total cost line will plot it like this. We will first of all know that total cost is equals to variable costs plus fixed costs. Total cost is equal to variable cost plus fixed costs. Now I'm going back to chapter 3, cost estimation. Remember, these variable costs, so that it's clear, this variable cost normally has got variable cost per unit times what? The number of units. If you agree with me, cost estimation so in cost estimation, that is what we said. Variable cost is equal to variable cost per unit times units plus fixed cost. Of course, that gives you the equation y is equals to mx plus c. Now, we do something like this. Look at this, please. Look at this. Look at this. We do something like that. So this is in high school. In high school, we were told that is x and that is y. And we were also told in order to draw a line, you need at least 2 points. You need at least 2 points to draw a line. So when I want to draw, number one, I want to draw which line? I want to draw total cost line. That is what I'll do. Total cost is equals to variable cost. Okay, so in that case, you take, when we have 0 units, please look at what I'm doing. When we have, I don't know what is not happening. Somebody to help me. Why am I not be in a position to type? Have I done a mistake somewhere? Okay, so if we start when x is 0 units, and also when target sales, focus sales, and also we look at when x is 1,800 units. You always put default units of x are 0 units when we don't make anything, and also when we make the target. You can see the target is 1,800. Now, what will be the y? Remember, y is the total cost. X is the number of units. Y is the total cost in this case. Y is that is why we always have y is equals to mx plus c. That is why we always have y is equals to mx plus c. Total cost is equals to where x is the number of units, where x is the number of units, and y. Now in high school we learned this. So what will be the total cost when x is 0? That is what, when x is 0, what will be the total cost? So what we'll do here, we will say total cost when x is equals to 0, it will be variable cost, you can see, is 40. I hope everyone can see 40 times x is 0. X is 0 plus fixed costs, plus fixed cost is how much? Fixed cost is 25,000. You can all see that. So what will it give you? Whatever it gives you. So what will it give you? Is equals to 40. I know the answer, I'm just following procedure. Plus 25,000. So what do we get? 25. And then you bring that 25 there. So how much is it? 25. You get it there. You go to the second one. Total cost when x is 1800. Total cost is equals to, when x is 1800, it will be 40 times 1,800 plus 25,000. Again, you get me the answer. The answer will be equals to 40 times 1,800 plus 25,000. So what do we get? 97,000. I hope it's 97. I'm just rechecking. 97. So in this case, it is 97. So from previous knowledge in school, you know that when x is 0, y is 25,000. When x is 1800, y is 97. So this one helps you draw which line? It helps you draw the total cost line. That helps you to draw which line? the total cost line. Okay, so this information is information that enables you to plot the total cost. I don't know really. I don't know why my screen is hanging today. Okay, it is now working. So it is now working. So what? Today I'm having a lot of technicalities. Okay, so that is total cost. Now to draw total cost line, that is what you do. To draw this information will help you to draw the total cost. Now this other side, I will also need to draw number 2. I'll also need to draw what? I'll need to draw number 2. Just a second, I find out what. Some IT people, you can help me. Why am I not in a position to type? What could be the problem? So number 2, I'm not in a position to scroll. I'm not in a position to type. What could be the problem? Or maybe I minimized a lot of things. Maybe that is a problem. Let me try to remove them. Thank you, thank you, thank you. Let me try to remove them. Let me try to remove what I minimized. I've tried to remove some. Yeah, thank you, thank you. That is what we call, yeah, that is the knowledge that I don't have. Thank you for, I've removed some things that I minimized. Okay, so let's move on. So number 2, that is total cost, how to draw the total cost line. That information will enable us. Number 2, how to draw the total revenue line. Total revenue line. So in order to draw the total revenue line, you will need to know that total revenue is equals to selling price per unit times sales units. Selling price per unit times sales units. Selling price per unit times sales units. Let me bring this here. Of course, I'll paste it. Now, here, the X will still remain as units, but the Y will now not be total cost. Y will be total revenue. So, look at this. So, we want to get total revenue when X is 0. So, we can say total revenue will be equals to selling price is 60 in the equation. 60 times 0. Sorry, 60 times 0, what does it give you? 60 times 0, it gives you 0, of course. And total revenue, so the second total revenue is equals to 60 times 1,800. 60 times 1,800, what does it give you? 60 times 1,800, it gives you what do we get? It gives you 60 times 1,800. What does it give you? 108,000. So with this information, we are in a position to draw total cost line and total revenue line. Once you are in a position to draw these two, you are safe. So let's look at the x-axis. X-axis, the maximum is 1800. 1800 is the maximum. Y-axis, I'm taking you back to high school. Y-axis, the max. Okay, I did not post this. This was 0 and this was 108. So y-axis, the highest is 108. So we come here. So what scale can we use? X, the highest is 1800. So what scale can we use? Maybe 300, 600, 900, 1200, 1500. What scale can we use? Somebody to give me the scale. If the highest, the lowest is 0 and the highest is 1800, what scale can we use? Maybe we can use a scale of 200. If this is 200, 400, 600, no. We can use a scale of maybe this is 300. This will be 600. Okay, let's choose. I've just chosen 300. This will be 900. This will be 900. This will be 1200. And this will be, I'm seeing that will be too small. It may be too small. Maybe 200. Okay. 200, 400. 400. This will be 600. This will be 800. This will be 1000. This will be 1200. This will be 1400. And this will be 1600 and 1800. Okay, that is okay. So even I can reduce the size. So this, where there is that line, now y-axis, somebody to help me, y-axis, the highest is 108. 108. So this one we can use 10,000. Are they 10 first of all? Maybe we can use, instead of 10, we can use 20,000. Let's see. This will be 40,000. This will be 60,000. This will be 80,000. Okay. This will be 100,000. And this will be 120,000. So that is appropriate for our y-axis. So again, I can reduce this to maybe size 10. Now, let's draw the total costs. Look at what I'm doing. When X, total cost line, when X is 0, Y is 25,000. So remember, this is the X-axis. And this is what? This is the Y-axis. So when X is 0, when X is 0, Y is 25,000. 25,000. Y is 20. So this is 20. This is 40. 30 is here. 30 is there. So where insert? So where will 25,000 be? This is 30. 25 will be there. because here is 30. Okay, so when X is that, that is what you have, 25,000. When X is 1800, Y is 97,000. When X is 1800, you can see 1800 is here. Y is 90, sorry, I've forgotten. Y is 97,000. Y is 97,000. So when X is 1800, Y is 97. This is 80, 90, 100. So 97 is roughly there. Now, from high school, you were taught that in order to draw a line, you need to connect this point and this point with a ruler, with a straight line. Now, in my case, drawing a line is very difficult for me. I'm trying to see what I can use to draw the line. So let me try. Let me try. Oh, I've missed it again. I'm trying to join the points. I'm trying to join those 2 points with a straight line. Okay, I've tried. So this is which? This is total cost. I hope you've understood what I've done. You know, drawing a line is very difficult, but I've tried. I've joined this point. So what have I done? I've joined that point to that point, to that point. Okay, that is total cost line. So let's go next to total revenue. Total revenue. In total revenue, when X is 0, Y is 0. When X is 0, Y is 0 here. When X is 0, Y is 0. The next one, when X is 1800, Y is 108. When X is 1800, Y is 100 is there, 110 is there. So 108 is slightly there. So 108 is somewhere there. So we want to join those 2 points again. I didn't even know that I'm in a position to draw a chart. This is very good. So I want to join those 2 lines. I hope I'll succeed. So in order to join them, it is not easy. It is not easy to draw that thing. So it is not easy. I'm really trying to struggle. I've missed it, sorry. Okay, let me try. It will be crooked, but let me just try. I'm really deviating. Sorry for that. Drawing a line is just not easy. It is quite hectic. What will I do? What will I draw? Drawing a line, drawing a line. Okay. Okay. Let me try. If I don't succeed, there is. I've missed it a bit. I've missed it slightly. So let me do it for the last time. In case I don't succeed, I'll give up. You can. I've seen what somebody has typed for me. Thank you. Let me hope what you have said will work. Let me hope what you have said will work. Let me try what you have told me. So you've said I go to insert, and then I go to shapes. Where do we get shapes? In Excel, where do we get shapes? Somebody to type for me. Where do we get shapes? Illustrations. I'm not seeing it unless my eyes are not. No. There is a way. There is a way here. I forgot that I'm using Zoom. There is a way. Okay, pictures. Let me try pictures. If I fail, there is a way. There is a way. Okay, I can use this. Yeah, I can use that. Yes, I forgot that I'm using Zoom. In Zoom, you can use that. Wow, this is wonderful. So we can use that. So, and we can also use, join that point to that point. Okay, now I forgot that, using Zoom, it is very easy to connect them. So that we can also use. So in this case, look at this point. This is home. Okay, let me close that. I've managed to, okay, that's good. So I've managed to draw, that is what I wanted, and I've succeeded in it. So I can go back to my inking, or even I can just go back. So here I can, this is total revenue. That is total revenue. And what we have here, remember, here, so what have you learned there? What you have learned there, with these two lines, you can draw any other. So with those two lines, you can draw any other item. So here in this case, look at what we are doing there. In this case, this is the target what? Target sales. The point where these points meet can somebody read for me? How much is that? If this is 1300, how much is that? This is the point BE. Somebody to read for me that. How much is that? Somebody to type for me the answer. What is the BEP? So that is, and then fixed costs. Fixed costs will be this. Fixed costs, that will be fixed costs. This will be fixed cost. So that will be fixed cost. So somebody to type for me, what is the BEP? 1250. Thank you. 1250. So what is the margin of safety? 1250. So this is margin of that region there will be the margin of safety. So somebody, so from this, I've finished what I wanted. Now from this, look at this. So we can conclude that BP is equals to, when we read it, is 1250 units from the chart. We have got that from the chart. Is 3 units. Next. Sorry. Now, so here we are saying BEP is equals to how much? 1250 units. Next, margin of safety. Margin of safety is equals to 1800 minus 1250, which is equals to, somebody to give me the answer from the chart, is equals to 550. Thank you. So thank you for giving the answer. So is equals to 550. What else? I think those are the major ones. Now, if you want to confirm that your chart is right, this is what you do. I'm very sorry for that. That is the problem with that is the problem sometimes. If you want to confirm that your answers is right, you can as well also do calculations of BEP. We said BEP is equals to fixed costs divided by selling price minus, if you want to confirm your graph is right. So what was your fixed cost? Your fixed cost was 25,000. Your selling price was 60. 60 minus 40. 60 minus 40. So somebody to give me that. So is equals to 25,000. We just want to confirm, divide by 60 minus 40, close and get your answer. Your answer is 1250 units. Your answer is 1250 units. Now, that is your answer. And that is the break-even chart. Break-even chart. Now, if I move, this will be interfered with. If I move, that will be interfered with. Now, in total revenue, it is also very easy. In the profit volume chart, Profit volume chart, maybe later on we can look at it. So if I move, this one will be interfered with. What can I do now? How can I retain this? You see, if I move, because we were drawing, these will be interfered with. So basically, that is what is called what? That is what is called BEP chart, how to draw it. Any question on how to draw the BEP chart? Profit volume is not common, but later on I can show you how to draw profit volume. Any question on that? I just wanted to give an example. Any question? Mostly in exams, you are just asked to sketch, not to use figures. But in case the examiner asks you to use figures, you know what to do. Is there any question there? If you have a question, you can type. If there is no question, we move on. Any question? I was just illustrating how it is. Now, if I move, it will interfere with the diagram. You see, it interferes with the diagram if I move. Okay, that is the previous working. But I don't want to interfere with the diagram. That is the disadvantage of that tool in Zoom. It moves. So that is what we have there. I'll share with you the Excel, don't worry. I'll share with you, let me not move so that I don't interfere with it. I'll share with you the Excel. I'll share with you the Excel sheet. So allow me just to move on. I'll share with you so that you follow. So allow me to move on, please. Can you just give me 20 minutes and then we end the class? Now, we were on chapter, somebody to return us back. We were on chapter 9. Please take note. I want to introduce the next chapter, but please understand me. There are some topics that are very common in exams. So I want to cover them first before I come back to chapter 10. I'm not going to chapter 10. I'm skipping chapter 10. I'm skipping chapter 11. I'm skipping chapter 12. I'm going to chapter 13. Today, I want us to introduce chapter 13. So I've skipped some chapters. I will come back to them. I will come back to them in our next classes. So I'm skipping this is chapter 9. I'm skipping chapter 10. I'm skipping chapter 11. I'm skipping chapter 12. Those are the chapters I want us to cover last. I want us to cover some very two important chapters early so that you have time to revise them many times. And those chapters are called budgeting and standard costing. They have a lot of formulas. So I want us to cover them before I don't want to cover them closer to exams. I want to cover them now so that you have enough time to revise them. And then once we have covered those chapters, we come back to chapter 10, 11, and 12. I hope you have understood me. So I hope you've understood what I'm saying. So I want to skip chapter 9, 10, and 11, chapter 10, 11, and 12. I want us to go to chapter 13, and then we will come back. Chapter 13. I will come back to the other chapters. That is what I always do in all my classes. I always cover chapter 13 immediately after chapter 9. So chapter 13 is called what? Budgeting. Allow me just to introduce it today, and then tomorrow when we meet, we will go straight to calculations. Budgeting. Budgeting. So what is a budget? So before we look at budgeting, in this case, we need to define what a budget is. So what is a budget? So when we define a budget is a quantitative plan of action, prepared in advance of the period to which it relates. So when we talk of a budget is a quantitative plan of action prepared in advance of the period to which it relates. Quantitative plan of action prepared in advance of the period to which it relates. Quantitative plan of action prepared in advance of the period to which it relates. Why do we prepare budgets? In other words, what are the reasons for what? Budgeting. What are the reasons why we normally prepare budgets? Some people call it roles of budgeting. Some people call it purpose of budgeting. Some people call it importance of budgeting. Whichever word the examiner uses, you know it is reasons for budgeting. So if the examiner asks you, explain the reasons for budgeting, or what are the roles of budgeting, or what are the purpose of budgeting, or what is the importance of budgeting, you know what to tell the examiner. So I'm going to give you 7 reasons. Are they? I think they're normally 7. I will give you 7 reasons why we normally prepare a budget. So the first reason why we prepare a budget helps you in planning for the future. It helps in planning for the future. If you want to plan appropriately, accordingly for the future, you need to prepare a budget. Failure to prepare a budget, you will be failing in your future plans. The second reason for budgeting is to help you in evaluation of performance. The second reason for budgeting, it helps in doing what? Evaluation of performance. Your performance can be evaluated in relation to the budget that was set. Your performance can be evaluated in relation to the target. Those in the public sector, you know this. At the end of the day, we want to see if you spent what was allocated in the budget. We will use that to evaluate your performance. The third reason for budgeting, it helps in controlling your costs. Controlling what? Of costs. If you want to manage your costs accordingly, prepare budgets. If you fail to prepare budgets, you may not manage your costs well. So number 3, it helps in controlling of costs. Number 4, it helps in coordination. These things are in your notes. These points are in your notes. You will get them. I don't have my notes here, but if you have already collected, I saw some people have already collected their notes. It helps in coordination of activities of different departments. Activities of different departments. So budgets help an organization to coordinate activities of different departments. The fifth reason for budgeting, it helps in authorization of expenditure. It helps in authorization of what? Expenditure. Think of those working for the government. You cannot spend in anything that was not allocated in the budget. So an item must be allocated in the budget, and after that is when you spend on it. You cannot spend in an item that was not allocated in the budget. So budgets helps in authorization of expenditure. Next, budgets, and I think it's the final one, budgets help in communication of targets. It helps in communication of targets. It helps in communication of targets. So if you have been asked, what are the reasons for budgeting? It helps, number one, planning for the future. Number two, evaluation of performance. Number three, controlling of costs. Number four, coordination of activities of different departments. Number five, authorization of expenditure. And number six, communication of targets. Communication of targets. Communication of targets. Next, what are the steps involved? Steps involved. This is also a very common question. Involved in budget making process. I must give a disclaimer here. Steps involved in the budget making process. What steps do you follow? Think of, you have just started your business. Think of it as a new, don't think of an ongoing business. Think of a new business, a completely new business. You have never done a business before. What you have just started your company and you want to prepare a budget. What are the steps followed when preparing a new budget for a new business? So steps followed, here we are looking at steps followed when preparing a budget for the first time. First what? Time in a new what? Organization. In a new organization. What are the steps that you will follow? So step one, there are 8 steps to be followed. Step one, find out what are your long-term objectives. What are your long-term objectives? In other words, define the long-term objectives of the company, objectives of the organization. So find out organization. So step one is to define the long-term objectives of the organization. Define the long-term objectives of the organization. Why do you need to know your objectives? Budgets that you prepare depends on your objective. If the objective of the company is to minimize costs, you will really cut down on the budget. You will try to trim the budget. If the objective is to minimize what? Costs. In the public sector, the objective is not to minimize costs. In the public sector, the objective is to satisfy a number of, it's called what we call public utility. Public what? Utility. To satisfy majority of the citizens. So in the public sector, we don't really look at the costs. So the budgets that we prepare are not cost sensitive. They are service sensitive. They look at the needs of the society, and the budgets you prepare must be in line to the objectives. Step two, once you have known the objectives of the company, next you form formation of a budget committee. The next step is to form a budget committee. Second step is to form a budget committee. Form a budget committee. Now, a budget committee must have the CEO in it, or the representative of the CEO. It must have the HODs, you know, heads of departments, and it must also have the what we call budget officers. Budget what? Officers. Now, a budget committee might have very many members, but actually it's called principal budget officers. Principal budget officer must be represented. So a budget committee can have many members, but there must be a minimum of those. There must be the HOD, the CEO, and the principal budget what? Officer. We are not saying the CEO in person. There can be a representative of the CEO. Step 3. Once you have formed the budget committee, the next step is preparation of a budget manual. Preparation of a budget manual. Preparation of a budget manual. So the next step is preparation of a budget manual. Preparation of a budget manual. A budget manual shows you how to make different types of budgets. If you have a phone, there is a manual to that phone. What does the manual of the phone tells you? How to use the phone, how to operate the phone. So a budget manual also shows you how to prepare and use the budget. Step 4. Step 4 is to identify the limiting factor. Identify the limiting factor. Identify the limiting factor. It is normally called principal budget factor. A limiting factor is called a principal budget factor. What do we mean by that? Normally, we don't have enough resources. There is what we call scarcity of resources. So the budget that you prepare must be in line to the resources that you have. If your organization has fewer raw materials, you will prepare fewer units because you don't have what? Enough raw materials. So the budget that you prepare must be in line to the limiting factor. So if materials is a limiting factor, the first budget to be prepared will be a materials budget. If labor is the limiting factor, the first budget to be prepared will be a labor budget. Step 5, prepare initial budget. Prepare an initial budget. Prepare an initial budget. Prepare an initial budget. Consider what we call budget slack. Budget slack is where expenses are overstated and incomes are understated. When preparing an initial budget, you must factor in budget slack, where you overstate your expenses and you understate your income. What is the reason for this? When doing business for the first time, don't overstate your income. But when doing business for the first time, your expenses will be very high and your incomes will be very low. So when preparing a budget, factor in that. That is called a budget slack. A budget slack is where expenses are overstated and incomes are understated. Where expenses are overstated and incomes are understated. Step 6, review the initial budget by removing slack, budget slack, by removing budget slack. Now think of it, you have already prepared a budget for the first time. You have already prepared a budget for the first time. In your second year of preparing a budget, you now know what your actual expenditures are. So you cannot overstate your expenses and you cannot understate your expenses. In that case, you are reviewing the budget and removing the slack. Step number 7. Step 7, prepare a master budget. Prepare a master budget. So step number 7 is to prepare a master budget. Prepare a master budget. A master budget must have, has budgeted income statement, income what? Statement, comma, it has also budgeted statement of balance sheet. You know, balance sheet is called statement of financial position, balance sheet, and cash budget. A master budget has those three and has a cash budget in it. So you must prepare those three. You must prepare those three items. And lastly, step 8. Let me try to see if I can reduce that size. Step 8. Step 8. There is no budget that is perfect. So you must continuously review the budget making process. Continuously review the budget making process. Continuously review the budget making process. So continuously review the budget making process. There is no budget that is perfect. So every day, every year, you'll be reviewing the budget making process to try and perfect on the budget that was prepared. To try and perfect on the budget that was prepared. Now, we will look at the following types of budgets. Types of budgets to be covered. Types of budgets to be covered. Which budgets will we be preparing from tomorrow? Number 1, the first will be called functional budgets. Budgeting is a topic that must be there in exams. Functional budgets. Functional budgets, here we'll prepare what is called sales budget, materials budget, sales budget, next production budget, next there is materials budget, there is labor budget, there is variable overheads budget, and fixed overheads budget. So those are the budgets we'll cover. Tomorrow, the whole of the class will be covering functional budgets. Next, we will cover what is called a cash budget. We'll cover what is called a cash budget, which is also common in exams. And then we will finally look at approaches to budgeting. And under approaches to budgeting, we'll cover what is called top-down budget, bottom-up budget. We will cover what is called incremental budget. We will cover what is called zero-based budget. We will cover what is called activity-based budget. And finally, we will cover what is called rolling budget. So those are the budgets we'll cover under approaches to budgeting. So these are the 3 areas we will cover under types of budgets to be covered in management accounting. So maybe lastly, let us, number 1, so that I know where to start tomorrow, functional budgets. That is where I want us to start the next class. So functional budgets. Okay, okay, I'm going back to the previous slide. Okay, so we have that. Those are the types of budgets that we'll be looking at. So tomorrow when we come, we will start on functional budgets. We will start on, sorry, Ellie, I'm going back. I'm just deleting something. So that is where I want us to stop this class, unless there is a question. Unless there is a question, let us stop there. Let's meet tomorrow at what time? Let's agree on the time to meet. The class should start at 4:30. Sorry, can we start the class at 5? Do you agree with 5? Because some people tell us, can we start? Last time, what time did we start the class? So that we all agree. I think it is, what time is best for you, those who are working? What time can we meet? What time? What time you can type so that we agree before we end the class? What time can we, you can type the 5 is okay. 5 is okay. So majority are saying 5. No, okay, majority are saying 5. So let's meet at 5 tomorrow. At 5, exactly at 5, let us be online. Have a good night. At 5, let's start at 5 tomorrow. Sure, I'll share the Excel. I've had you. I'll share the Excel the first thing when I reach the office tomorrow morning.